Hey everybody, this is Jim at SB500chart.com. It's about 10 minutes before 2 o'clock on Sunday afternoon here on the East Coast on October 20th, 2013. We're going to take a look at the markets in what took place during the week, the ending, the 18th of October, and we're going to take a look at what happened specifically on Friday the 18th. And before we do this, though, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. All of that to say, be careful. You can lose money in the markets no matter what you think you might know at any given point in time, and no matter what the chart may look like at any point in time, it's entirely possible to lose a lot of money. So let's take a look. Okay, we're starting out. We're going to take a look at the daily chart of the S&P because there's just a couple things I want you to see to put this in a broad context. And that is, there are times when channels develop inside of channels, and those channels themselves are not the be-all or the end-all of what's going on. And we may be looking at one of those situations right now. And the reason I say that is that we've got two resistance lines in the S&P. One is this red line that you can see extends from the top in May of 2010 and the top in, I believe that was early May, late April of 2011. And we extend that out. It has not been touched in over 2 years. Matter of fact, 2.5 years. Now, go back to the daily chart. We've got this purple line that it is, I've just kind of picked two tops here, and I'm ignoring this one back here. We could say, well, let's pick on this one and extend it out. The reason I've chosen this one is these are the last two significant tops that have produced a significant sell-off, and they line up to extend this purple line right here, which isn't quite, but is fairly close to being parallel with either our lower blue line, which we tagged back in 2012, or the teal line, turquoise line, that we also tagged in November of 2012. So in other words, what I'm saying is, if I were to say, let's draw a line here, I could, and that may not be a bad thing to do, but the point still remains the same, and that is, we only have one resistance line in this chart that we can point out and say, expect resistance here. And it's a pretty much fairly short-term line. And that is this little line right here that I just highlighted. Okay? So we have this purple line that's currently well over 1800. We've got this red line that's currently well over 1800. And then we've got this little light blue line, which I'll probably change back to a darker blue. Let's just go ahead and do that. A little darker. There it is. If the S&P can get the strength to move up over this line right here, then really the closest thing that we could have towards resistance in the long term would be these two lines up here, but we could find some resistance just the same at this green line if we were to get crazy and all of a sudden put on a lot in a hurry. I don't think that's going to happen. So that's why I do not believe this line is really going to, I don't think this line probably ever gets touched again because it's just rising too quickly. But we'll keep it on the chart just the same. It's these two resistance lines that if we get over this line right here with some gusto, with conviction, then we could very well be looking at a move to the low to mid 1800s. Now, with that said, that's kind of our, call it a yearly or monthly review. Let's look at what's taken place a little bit more specifically to last week. One of the first things to notice is that we were in a rising channel coming into the week, and on the 11th, we tagged the top of that rising channel. That was the Friday preceding last week. And then on Monday, we adhered to that line. On Tuesday, we broke it. Now, what was interesting was we pointed out on Tuesday that the shape to all of the trading that took place after having taken this line out. By the way, this was a very steep channel, and you can't expect a really steep move to just keep on keeping on. It's got to either reverse, do a hairpin turn and go back down, or it's got to go sideways for a little bit, consolidate, and then renew the move that was present before that sideways motion. And that's what we got. We got a sideways motion. We identified the possibility on the 15th, that's Tuesday, we identified the possibility of a descending wedge pattern based upon just a very small feature in the 5-minute chart, with the idea that if the S&P can break out over this wedge and get out over this 1710 resistance area, then we will likely be setting up a move to, based upon the depth of our shoulder and head inverted pattern that once again never made that right inverted shoulder. The idea was if we get over this line and we break out over this descending wedge pattern, then we have a target of about 1740. And guys, Wednesday, Thursday, and Friday were spent setting up that bullish move to 1740, exceeding it, in fact, closing near the high of the day at 1744. Now, here's that resistance line. And you can see on this chart, this line looks to be almost parallel. And that's important. When we look at it on this chart, it's not quite as parallel looking, but it's not a steeply descending, a steeply ascending line either. So if this line was really cranking on up like this green line, then I would say expect some strong resistance here. But if you look at the last 1, 2, 3, 4 months, essentially, if you look at the levels of late May, when the S&P was hanging around, let me get my correct tool here, around 1680, and then you look and you say, well, in August, what were we? Well, we were around 1680. Then we dipped down into the mid-1600s. Then we got up to 1720, 1730. Then we're back to 1660. So you can see where really this isn't quite sideways action. It has had an upwards bias to it. But I'm open to the possibility that that what we're seeing here is a consolidation. Because if we take this peak, 1690, call it 1688, back in late May, and then the last peak at 1730 in mid-September, that's not like a lot of pent-up selling pressure. If we were, in other words, if this pattern was just tilted up about another 5 to 6% of market value, then I would fully expect this line to give strong resistance. But this line just isn't slanted up to that degree. So I'm keeping an eye on this with the possibility that we break over this line and that we start to head up and we challenge 1800. It just doesn't look to me to be that far of a stretch, and I could see that happening. Now, you might say, well, do you see anything else in this chart that says we would do that? Well, if you look at this this last few months as kind of a consolidation pattern, then we've got a lower line here and we've got our upper line here. You can measure the depth of this and say if we break out over that, then we should be seeing that move. So coming into the week starting October 21st, I think the thing we need to really key in on and watch very closely is this level right here. We closed a fraction above it, but a fraction above it is not technically significant. I would say if we see 1760 and we don't see any kind of top form right around this area, then I would be looking for a move up to 1800, and if it's a nice strong move, then we could even come up and challenge this purple line or this red line in the 1820, 1830, or even 1840s, depending upon when that may happen. Now, I just want to say one more thing. If we get up there, then I would start to look for signs of weakness. But right now, if we break over this line, and I would say a good spot to say we're definitely over it in a technically significant way would be if we get up to 1760. Okay, I would still watch it like a hawk, but because when you're in new high territory, you're kind of going, okay, we are now in an area that the market has never been. The S&P has never been up here, so we don't know. We're looking and we're expecting resistance up here, but when you're in no man's land, it gets very interesting. So for right now, it's looking like we may very well be in a setup to establish more new highs in the weeks ahead. But in order to do that, and it's painfully obvious, but I have to say it anyway, in order to do that, we've got to show that this resistance line right here is not a bearish condition, but rather a potentially bullish one, and that would take a technically significant breakout over this line. Then I could see a move continuing for a number of days to get this market to 1800, and I could even see this market coming up here and tagging one of these significant resistance lines in the mid to low mid 1800s. So I think it was a pretty good week. I'm glad we spotted this little descending wedge on Tuesday that saved getting out of the market. That hopefully was a sign that said, okay, we got up over this pattern, so I'm standing pat. No need to get too concerned at this point. Let's see what tomorrow brings. Maybe watch the futures tonight, see if there's some clue as to what we may run into to start this week. Finally, I just want to say thank you for your support throughout the past 2 years that this has been a subscription site. I do appreciate that, and I hope you'll continue with this into year 3, and I hope you'll tell some friends about what we do here. This has seemed to work pretty well, and I'll be honest with you, there are times when I don't know. Nobody knows what's really going to happen for sure. And there are times when I know I hem and haw a little bit, and I hedge my bets, and I don't want to speak too loudly or too boldly about a situation. The reason I do that is because the last thing I want to do is lead somebody to take some action that is not justified. And if I'm sitting on the fence, I feel it's more important for me to honestly say, hey, I'm sitting on the fence, than to come out with some bold proclamation that engenders some kind of false sense of security. That's the last thing I'd want to do. If I'm insecure about what where the markets are headed, then I think if that comes out in one of my videos, then that's just a form of being honest. So guys, take care. Thanks for your support. Let's see what this week brings us.